Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is the 21st of October. Today we're going to talk a little bit about wheat. We're going to get into the oil seeds and the soybean issues or the soybean opportunities or issues, depending on how you want to look at it. And then we'll talk a little bit about just the general markets as a whole as we get through this week here, getting into the end of October. So let's talk about what happened in markets today. We saw canola about unchanged at $630.10. Minneapolis wheat was down 3 3/4 to 549. In fact, the entire wheat complex took a little bit of a hit today, and I think Minneapolis was just following the trend, even though Minneapolis made a new low today. We'll touch on that in the charts here in a second. Kansas was down a nickel at 4.85. Chicago down 4.5 cents at $5.25. Soybeans were down 1.5 cents at 10.48 1/2. Corn was down 3.5 cents at 4.19 3/4. Bean oil was down 66 points at 50.65. The Canadian dollar up slightly, still in the low 71s, though 71.33. Live cattle recovered some of its losses from earlier or late last week. At live cattle now is 245.43. That's over the December. Feeder cattle at 370.28 over the January. All right, let's get into some of the charts here. Here is December spring wheat. As we mentioned, we did push to a new low today in spring wheat values. But there is something kind of important happening here, particularly in the Canadian market. And I've even heard some stories about premiums that are even bringing these prices higher. This top chart here is the cash price of Canadian 13.5 spring wheat. The reference area I'm using is Northern Alberta, or I guess most people would call that Central Alberta, Yellowhead Corridor in Alberta. But look what's happening to basis here. So the price is flat as futures are declining, but basis is increasing. So that's leaving the cash prices relatively static. And now we're hearing about some premiums and things like that to try to incentivize some shorter term delivery of wheat. So I think the farmer selling has petered off a little bit. Um, and I think there is still some demand to bring wheat into the elevator system. There's low demand for canola, so I think wheat is the commodity that could make up some of that volume. And as we all know, elevator companies make money by pushing volume of grain through the door. There is one other reason, though, that the basis level is increasing, and that is the weak Canadian dollar. Now, it has stabilized somewhat in the last little while. We actually saw it rise today in line with crude oil. So it's not like we're seeing the Canadian dollar decline any further, but I think that the recent declines, as you know, from the middle of September now, as we get into the end of October, is being priced into the Canadian wheat market prices and the basis prices and things like that. As you can see on this chart, the Canadian dollar still doesn't look healthy. We just saw the 20-day cross over the 200-day. That is a pretty bearish technical signal, at least in my opinion. And we are still kind of trading below this um, resistance, or the support level that was previously a support level is now a resistance level on this end. So the Canadian dollar could still have some weakness to go, which may help the wheat basis values here in Canada at some point. All right, let's kind of get back into the wheat charts here. As you can see, this is Kansas wheat still trading strongly inside of this channel. Tested the 20-day yesterday or on Monday. Fell a little bit today, still inside the channel there, but that's why we're also seeing some weakness in the spring wheat as well. CBOT wheat or Chicago wheat is doing much of the same. Test of the 20-day yesterday inside the channel. A little bit of a down day today. You know, one of the reasons for the analysts have raised estimates for now Australia's wheat crop. A Reuters poll showed that most analysts on Monday had raised the Australian wheat crop. The problem with there being a government shutdown in the US is that there isn't a USDA report. So there's usually where there's a monthly baseline adjustment, you could call it. We're not seeing that. So the market is relying on analysts in order to try to guess what the crop is. And being an analyst myself, I know we're fallible. So, lots to talk about there. ICAR, which is a independent analyst in Russia, did raise their estimate as well to 88 million metric ton, which is a 500,000 metric ton increase from their September number. What's also important about that is that the last USDA report, which was again released back in September, had the Russian wheat crop at 85 million tons. So ICAR is calling it 3 million tons higher than the USDA. And as you can see, 88 million, if that's in fact the number, would get it into the top three, only lower than 2022 and 2023. All right, let's move into some of the oil seeds here. Canola, as we spoke about earlier, ended up flat. $630.10 is where we finished. We did kind of move below. It's hard to see on this chart. I'm sorry, I should have blown it up a little bit more. But today we did see trade back below the 20-day moving average. So in the earlier to middle part of last week, we actually moved above the 20-day moving average. We moved above the channel resistance that canola had been trading in. It's faded a little bit, but like very mildly faded a little bit since then. I still think that there is quite a bit of farmer selling happening in here. And canola didn't react to the upside that we've seen in soybeans in the last little while. So as we're talking about soybeans, why don't we talk about soybeans here? As you can see, 3 sessions before today's, we saw some really large gains in the soybean market, yesterday being the largest of those 3. There is optimism being priced into the market that President Trump and President Xi Jinping of China will be able to make a deal, and that soybeans would be one of the front and center topics. We've been saying that a positive trade deal would be bullish for the market, and we just want to be careful that the optimism that is being priced into the markets, as it may be, somewhat premature. I think today's trade kind of shows where, the trade wants to push it up, but then it kind of has backed off a little bit. We do still think that if there is a positive result from the trade deal or from the trade talks at the end of the month in Korea, that we could see some continued upside. This would be particularly pronounced if we saw a purchase of Chinese beans from the U.S., even as a goodwill gesture exiting those trade talks. So today, again, it looks like optimism is being tempered a little bit, and that the market is not comfortable pricing in more of that optimism than warranted. I did want to kind of point a couple of things about this. It's in a politics website or politics magazine, whatever you want to call it. This is another example of how soybeans are making it into the mainstream media, and I think that's important for farmers. I think it's important for farmers in the U.S., which obviously benefits us, because anytime we put soybeans in the headlines, President Trump in the U.S. seems to respond to very acute situations. So anytime you make a big deal out of one particular topic, he tends to jump in and try to solve those. So I think keeping soybeans at the top of the docket as far as discussion items is probably a good thing. And I think the media is doing a good job of keeping it front and center. I've seen a lot of interviews with U.S. farmers. I've seen even some news agencies online, such as Breaking Points, have talked about soybeans and things like that. So it's a good thing. The funny thing about this particular article is that the beans that they chose to put on this article are not soybeans. But hey, what do we expect from politicians, right? All right, let's get back into some of the oilseed charts here. Here's December soybean oil. Again, this might be why we are seeing canola seeing some losses today. Soybean oil took a bit of a hit today, traded back down to the 20-day moving average. Still not necessarily outside or inside of the normal, or it's still inside of the normal trading range. Hasn't moved outside of the kind of flat trading range that we've seen so far. So nothing really concerning about that other than maybe some profit taking and things like that in the bean oil market. Corn did much of the same here. We were kind of talking a little bit in past videos about the move of corn above the 20-day moving average and outside of this minor resistance level. Still think that's positive. Corn came down today to test both of those things. That channel down and the 20-day moving average kind of converged today. Corn did come down and test those levels. So if we could see continued weakness tomorrow, that might spell some trouble. But if we see some bounce, that would be optimistic overall. Okay, just kind of talking about the market as a general, I think this headline sums it up well. Large crops muting upside for beans, corn, and wheat. Just to kind of give some high-level talking points here. So in the soybean market, U.S. sales have saturated non-Chinese markets, making it difficult for Ontario soybeans to compete and other areas to compete. So the U.S. is pushing beans into other areas. Big yields in the US on soybeans as well. For corn, early yield reports confirm that the USDA's crop estimate of about 427 million tons. So big crop there. And then, as we kind of mentioned, the seasonal rally that occurs in fall here for wheat normally has been muted due to larger than expected production from pretty much all major exporters. So that's Canada, Australia, Russia, the US. All of those areas had really good yields this year. So it's going to be a tough slug for wheat. If you're not subscribed to this YouTube channel already, hit that subscribe button because we want to see you here. We want you to comment on our videos. We want you to tell us what we're doing right and what we're doing wrong here. So hit that subscribe button, and we will see you again tomorrow. Have a great day.